Good morning, Wall Street winners. It is Wednesday, March the 5th, and we heard last night from President Donald Trump in his speech, the State of the Union speech in the US, uh, about all of the initiatives underway and all of the great things his administration has done and how great his administration is. That was reinforced how bad the Democrats are and how what a dreadful state Joe Biden left the country in. That was reinforced. We didn't really hear much about tariff relief, which we thought we were going to, based on Commerce Secretary speaking about that earlier in the afternoon after the markets had pretty much crashed for the day on the tariff implementation. He was he had pretty much doubled down on tariffs, saying that they are critical. They're what is going to make America great again. And then there was a lot of showmanship around different folks in the audience who had very sad events happen in their lives, typically to family members or work colleagues, and those folks were acknowledged and recognized, and it was a bit of a show. So, what comes out of this? Right now, not a lot, but what we are told is that we are to hear something this afternoon. We don't have a time, but this afternoon around tariff relief for the United States' two largest trading partners, Canada and Mexico. So we'll see what comes out. But right now, because of that, markets are pretty much on edge. And although they were up during the speech last night, they have pretty much settled to be flat. So both the Dow Jones and S&P 500 are pretty much flat. The Nasdaq was up a quarter of a point. It's now dropped to a tenth of a point. So it's flat as well. And I think what we're going to see today is just a lot of trepidation in the market because we still don't have any clue. The administration is extremely flippant and cavalier in their attitude towards changes and then making announcements. One of the announcements out last night was Donald Trump has plans to cancel the remaining funding in the CHIPS Act, which I understand to be around $60 billion remaining. He's also laid off, I don't know the percentage, but I think it's more than 50% of the folks involved in managing the distribution of that money. I think those were in the Commerce Department, but I could be wrong there. But whatever government department they are in, I think about 50% have been cut. So it leaves a bit of a skeleton crew to handle that anyway. And if we look across the board, the VIX is rising. So we're around 24, just under 24, which is the volatility index about 30 days out. So it's definitely concerning, and that it will, in my opinion, continue to rise throughout the month of March. We still have a budget bill that needs to get passed in mid-March by the US to ensure that the government doesn't go into a shutdown. And if you recall from President Trump's first term, I believe he had the longest government shutdown in recent history. I'm not going to say ever, but I believe it was in recent history, and it didn't seem to phase him. It was something that he was relatively proud of at the time, and so I'm not going to be surprised if that's something that happens again, and he lets go on for longer and longer in order to convince people in the government to quit their jobs. That's what Doge is out there attempting to do, is get folks to put in resignations and or fire them if they're not actively working and delivering some value to the American citizens. So I can imagine that a shutdown is not something that he is that concerned about. Certainly hasn't really come up in many conversations. We look at oil. Oil is, I'm going to say, plummeting. It's not really plummeting, but it's plummeted. It's down at under $67 a barrel, which is pretty low for what we've seen over the course of even the last year. I mean, if you look at the 1 year chart here, it is definitely the lowest it has ever been in the last year. In the last 5 years, it has dipped down into the 40s and mid 40s, but that was in around the COVID times when manufacturing had stopped, production of goods had stopped, so the consumption of oil had stopped, and hence when the demand dropped and there was more supply, prices came down. That is not the economic time frame or cycle that we're in right now to see oil at $67 a barrel, especially when we again heard the president last night say we want to see drill baby drill. So what does that all mean, and when is this actually going to happen? Is really the question, I think, for a lot of the oil producers. I think it could end up being a pretty good time to get into oil, but right now, I'm just waiting for more certainty across the board. I think it's an extremely risky time to get into anything. I know as a consumer, I've cut back on spending in the last few weeks, and I imagine I'm not alone in that aspect because I really don't have a clue what's going to happen and what's going on. We look at tech, and tech, for the most part, is pretty flat. CrowdStrike got smacked yesterday with earnings and was down more than $30. Now it's down $26. I made a short video on that yesterday. The price to earnings ratio for CrowdStrike is just way out of whack. If you look at the price to earnings of this company in the 700s, like that is completely unrealistic. There's no way its growth supports a price to earnings ratio that high. That stock is going to come down way more from where it is right now. Um, we've got some announcements coming up in the next little while. So Micron towards the middle end of March is going to make an announcement. So it's making a slight comeback. I'm a little surprised actually, because with the announcement that the US is going to stop paying out in the CHIPS Act, I don't know where they are on the payments to Micron, but I know Micron was one of the companies receiving those payments. TSMC also received some payments, but apparently not going to receive any more. And there was no payment agreement made to get them to make an additional commitment that they made just this week. Or late last week to the US to bring more semiconductor chip manufacturing into the US. Scrolling down further, it's really a mix of red and green, and anything that is in the green, it's not up significantly. So there's not a huge number of movers to the upside here in a positive kind of way. We do have announcement coming out from Broadcom tomorrow. So Broadcom is up 1%, which is certainly more than the NASDAQ index right now. They'll report after market tomorrow. So it will be very interesting to hear what they say, and more interesting to hear what their future forecast looks like and whether we see any positivity there. Meta got absolutely slammed yesterday, made a bit of a comeback, but as all the ships are going down, all the stocks are going down with the tide. If the tide rises all ships and then sinks, not sinks, but lowers all ships, that's really what's happening when the index fell yesterday. The one standout here is Alibaba. The Chinese government has just announced that they are making some huge monetary investments. So they're printing more money, basically. What the US did and Canada did and many other nations did coming out of COVID, to get out of their real estate crisis and better support their financial institutions, as well as infrastructure projects that are needed in the country, and to help incentivize consumers to spend. They have just announced some relatively large stimulus packages in China. That said, they're also projecting 4 to 5% growth in GDP this year. So while the US, I think, will be lucky to hit 2 to 3%, the Chinese government is projecting 4 to 5%. So, based on that, Chinese stocks are having a good day today in the Chinese market, and that's being reflected in some of the ADRs. So you can see that BABA is up $3.50 there in the pre-market. You've got Nvidia up here slightly. Google had a good day yesterday in terms of a comeback, where everything else really dropped. Google did not. However, Google is probably at a low price point already steady relative to where others are and relative to a price earnings ratio. If you look at Google's price earnings ratio, it's 21.4 times. So here's a question for you. Would you rather buy Google, a search engine that, yes, is being slightly displaced and losing market share due to ChatGPT, but also has Gemini and a number of AI initiatives and projects in the works? And it has multiple other streams of revenue, including YouTube, which we're on here listening to this video, a huge search engine in and of itself, and has data to drive more AI, as well as Waymo for self-driving cars and many other initiatives through the Moonshot program they have. Would you rather buy a company like Google, who's established and has a 20 times earnings ratio, or CrowdStrike, which, yes, is making great headway and progress in the cybersecurity space, but has a 700 times? I think you're going to do way better with Google. So I would stick to a big name there. Adobe had a good day yesterday as well. Surprisingly, they've got earnings coming out in 7 days. So we'll keep an eye out for them next Wednesday. TSM up as well. So had a good day yesterday, probably on the news of the additional US announcement of increased funding or increased manufacturing and the funding to support that. And then it's up in the pre-market as well. Financials got clobbered yesterday. So if we look at financials down pretty much across the board here, Goldman taking a big hit down to 581, Morgan Stanley in the 120s, JP Morgan down to 250, M&T off highs of 200 down to 180, Raymond James dropping down to 144. In my opinion, that should probably be a $120 stock anyway. So still a little overvalued from my perspective. Looking at the price earnings, 14 times relative to the industry. SoFi's been getting hammered as well. I think it's a good opportunity to get into SoFi at that price point. And then Apollo Global Management. So this was one that was in the mid 150s, even up to 160 a week ago. It's now down into the high 130s, looking like it's going to drop into the mid 130s. So there's definitely a correction happening. The question is now the time to get in? And I think a lot of, well, part of the answer to that question will depend on what we hear from the U.S. Commerce Secretary or President Trump today, whoever makes the announcement around some kind of tariff relief for U.S. From the U.S. to Canada and Mexico. And based on that, that may be the start of a turning point, but depending on how many of these tariffs are still in effect, I I expect we're going to see a economic slowdown. We've already seen jobs reports in the US come in today. I believe they were 77,000. That's a lot lower than they've been in a long time on a monthly basis. So new job starts are lower. We've seen consumer confidence drop. We have concerns in the consumer populace about the price of goods, inflation, the cost of eggs, the cost of food and groceries. All of this are signals of the potential of a recession coming. Now, I think what President Trump and the administration are trying to do, they clearly likely don't want a recession, I would have to assume, but they do want to see the US Fed, and we're going to hear from a few Fed members this week talking, no Fed announcement per se, but they will have interviews and give speeches. I think what he wants to do is to force the hand of Jerome Powell as the head of the US Federal Reserve to lower interest rates in the US, because that will help to lower debt service costs for the huge amount of debt that the US has. And the Congress and Senate and President are looking at very creative financial ways to allow his tax cuts to go forward without inflating the deficit and creating more debt. But anytime you work in a financial derivatives context around government budgets, it typically ends up burning the citizens or the population in the end. It's rarely does it work out well for the end citizen. It's just a way for these politicians to push through changes that appear to be good or that they want to believe will be positive, but that have long-term ramifications. So we're definitely at a point in time where things are changing dramatically under the hand of the new president. And from his speech yesterday, that is exactly what he wants. So if you feel that it's not right, I can't argue with you there, but you are going in direct contradiction to what he is trying to accomplish. So I think we need to figure out ways to work within this new paradigm. And that's what I'm thinking of these days. I don't have an answer for you. When I do, I'll share it. But that's where we are on Wednesday, March 4th. Good luck in your trades. And if you're liking these videos, please hit the like and subscribe.